Hi everyone, hope you're all doing well. Welcome back to another episode of the Edge Capital video podcast series. In this video, I'm joined by Robert Khodadoost, Head of Research at Edge Capital. For those less familiar with Edge Capital is a $700 million investment manager focused on sophisticated CeFi and DeFi trading strategies since 2020. And we were the first investment manager to actually offer a crypto-denominated share class in Bitcoin, Ethereum, Solana, and other digital assets. In today's conversation, we're going to break down the shifting dynamics of DeFi, from how yields react to crypto volatility and the notable resilience shown in October's liquidation events across the space, to the growing global focus of stablecoin regulation and its implications for the ecosystem. We're also going to touch upon the expansion of real-world assets, RWAs, tokenization, and the key opportunities and risks connecting traditional finance and on-chain systems. And very lastly, we'll look at the rise of tokenized yield vaults and why they become one of the hottest areas in DeFi. So as always, this is a research call. Please note that the content is not financial advice and does not constitute or recommend to buy or sell securities. Please view the disclaimer at the end of the video. Robert, I'll hand it over to you. Just diving in, so how are you currently seeing the DeFi yield environment changing with crypto price volatility? And given the historic liquidation event we saw earlier in October, how did DeFi markets generally hold up?
Yep. So I think like this event, which happened on October 11th, the largest liquidation event ever in crypto, it basically showed that crypto and DeFi overall is a very, very resilient and basically anti-fragile ecosystem overall, right? So we haven't seen, even in the largest liquidation event ever, we haven't seen any large bad debts on any lending protocols, right? So Aave had some very small bad debt, but it was so small that all the returns which they did from the other liquidations make up for it. So I think it happened because crypto and DeFi made a lot of lessons from the bear market from 2022, 2023. People became very knowledgeable around the risk management and basically handling the extreme events, right? So I think it's been very good job made by all the risk management and all the risk managers and the curators on setting up the right LTVs, setting up the right liquidation processes in place, so that DeFi almost hasn't felt this event, right? So it's extremely good for the ecosystem, especially these times where a lot of institutions are coming on chain. So we're kind of showing them that we're robust, we're very secure, and we're with their funds being on chain, it's as safe as in TradFi.
Brilliant. No, thanks so much for the insight. Moving on to stablecoin regulations. Obviously, this is becoming a very hot topic and very linked now to the broader financial TradFi system. What does this mean for DeFi, and how do you see this sort of playing out in the short, medium term, or even perhaps longer term?
Yeah, so I think honestly, stablecoins became one of the hottest topics and narratives of this year, of 2025. And I think there's there is a stablecoin regulation became more clear with Genius Act in the US. We see currently a rising interest from institutions, right? Because institutions are right now they're seeing the value which they can get from stable coins, which is essentially a quite easy, straightforward payment process for them. So that they don't need to wait for 7 days to settle a money transfer, right? It's very easy. It's fully transparent, and we see a lot of big players coming in, which is amazing for DeFi ecosystem. With rising of stable coins, with rising of basic transaction flow, we can onboard, like we as an ecosystem, we can onboard new users on chain, on DeFi, and into DeFi apps, right? Because think of it, like the user which holds stable coins is much closer to become an Aave user rather than some random person with a bank account, right? So we're on the brink of onboarding basically like millions or like even billions of users into DeFi, which is like amazing times to be here. And like essentially, like it's quite straightforward that with the rise of stable coins, there will be a rise of transaction flows, and with the rise of transaction flows, the chains and then basically the apps and the stable coins themselves, they will make more money, which makes which is great for the ecosystem, right? Because we will because the valuation of the companies, of the chains, of the protocols, they will be rising, which will make them onboarding new users. So I think this is amazing times, and like I think the cornerstone users of stablecoin will still be the large institutions, right? Because I do believe that in next years we will see large banks using the stable coins, and like they will be fine using DeFi apps, which right now they're quite like not knowledgeable of, and not like quite a bit scared of, right? But in the future, like I see that big banks can use like big protocols to park their cash, right? Which is amazing.
No. That's fantastic, and I think I completely agree. I think we're going to see that that merger of TradFi and DeFi slowly sort of unite over time. As you said, when they see the value in all of these sort of stablecoin products. And another, I guess, a very hot topic is RWAs, or real world assets. So one of the largest evolutions in DeFi is the push into sort of RWAs. Again, bridging TradFi, traditional finance, and on-chain infrastructure. In your view, how big is this opportunity? And perhaps what are the risk hurdles that some participants may have to overcome?
Yeah, so I think this is an extreme, this is extremely big market. It's like if we unlock this market as ecosystem, we will like have 10x more in DeFi TVL over the next years, like for sure. I think basically from this convergence of DeFi and TradFi, there is a lot of value which is brought for both of these parts. For DeFi, DeFi is unlocking new users on chain to use their apps, to use DeFi liquidity, and to use the chains, right? So like for DeFi, it's mostly about the user acquisitions. While for TradFi, it's very interesting because TradFi can use a lot of primitives which are quite basic in DeFi, right? But which is not available on TradFi, right? Because like think of it, you can like even right now you can you can borrow against your tokenized fund shares, or you can borrow against like your bond or something else, right? And like even the Pendle kind of dynamics, even the Pendle technology is that would be great fit for TradFi, because users could, for example, trade their expectation on dividends on some particular stocks, right? I'm not even saying about like trading stocks 24/7 fully on chain, right? So I think because of this value which DeFi brings, we'll see a lot of TradFi users coming on chain, individuals and big institutions as well. But I think the major hurdles here is just like DeFi and crypto need to show the TradFi users that basically it's secure, it's fully safe to use DeFi, because even right now, with a much more clear regulatory path, with more safe kind of like regulation for crypto, a lot of users are scared of using DeFi, like basically because they don't know about it, and people are usually scared of the things which they don't know, right? So we have to show them, we have to educate them, and if the vast majority of people will know about all this value which they can get in DeFi, I think like DeFi TVL will become trillions over the next 10 years.
Fantastic. Thanks so much for your insights. And lastly, talking about tokenized vaults. So DeFi tokenized vaults such as Midas protocol have been very popular in the last 6-12 months. Why do you think this is happening, and how do you see this sector evolving over time?
Yeah, sure. So I think, like, first of all, congrats to Midas team on their amazing success with the vaults. We're extremely proud of working with Midas guys, with Midas team on this product, as we were one of the first vaults tokenized. Like, we were one of the first LYT, so liquid yield tokens. So I think what happened is we have a lot of users who became self-aware of kind of like their capabilities of risk management. They became much more aware about the risks which are existing on chain, and like they start to realize that like this is a kind of not a fake money. This is not a joke to make money in crypto, and they started like trusting their funds to much more professional players, right? So they said like, okay, we're not willing to make like triple digit returns, and we are fine giving up a portion of the yield, but we want our money to be safe, right? So I think basically this realization of the risk, and like the vast majority, like vast diversification of the DeFi apps overall on chain made a lot of people trusting the asset managers, right? Because asset managers are providing diversification, asset managers providing risk due diligence process on the investment which they do, right? And also like some of the asset managers, they're like also doing some like private deals, private kind of arrangements, which is not available for the retail users, but these retail users can benefit from that if they're depositors into these vaults, right? So I think like the one of the issues probably for this specific sector is that it's extremely young, right? So the curator kind of industry is extremely young. So like we can't see which curators are like doing specific, like extremely well, which curators are good at risk management, which curators are bad, because like it's been they get very small track record to show it, right? So I think like for general DeFi users, it's definitely beneficial to go through the LYT route rather than investing themselves, right? Because of all of the reasons which I mentioned. But what users really should do is do their own due diligence on the asset manager which they work with, right? So in this case, if they pick the right asset manager, it becomes very easy to access kind of like institutional risk managed yields, and with DeFi DeFi technology, they can do a lot of stuff with their investments, such as that if it's a token, they can borrow against it, right, on Morphle, on Euler, or somewhere else, or they can do the Pendle PTYT, right, which I already mentioned in the with the TradFi example. So they can do already all this stuff right now, which is amazing, right? So like people are essentially can bet on the asset managers' performance, which is why like DeFi is so amazing. So that's kind of it.
Great. Really appreciate your insight, Robert, and all the topics we discussed today. Thanks everyone again for watching this video. We've got obviously a lot more coming up with the rest of the Edge team, and definitely more insights from Robert and Vadim coming up in future videos. Thank you again, and looking forward to speaking to you all soon. Have a good day.
Perfect. Thank you.